Hey everyone, Ian King here with your weekly YouTube Winning Investor Daily update. I've got a really excited topic to talk about today. It's crypto's renaissance and why I think it's going to be here sooner than later. Before I get into it, if you like our content, please go ahead and smash that like button, subscribe to our YouTube channel if you haven't, and always go free or feel free to leave some comments and go free as well if you want to. Okay, so let's talk about why I think crypto's renaissance is imminent. And it all dates back to the beginning of Bitcoin. The beginning, there was the first blockchain that Satoshi Nakamoto invented. It came out in early 2009. And in that first transaction, in what was called the Genesis block, Satoshi Nakamoto encoded this message: the Times, 03 January 2009, Chancellor on brink of second bailout for banks. And what this was it was a UK article about how the government in the UK was bailing out the banks for the second time. So the origin of Bitcoin goes back to being an alternative to the banking system. Satoshi Nakamoto wanted people to know that he was creating this alternative cryptocurrency because he didn't agree with what was happening, because the banks, not only in the UK, but the United States and all throughout Europe, we're getting huge bailouts during the financial crisis. Now, you might agree that that was a good thing at the time, but you could also disagree that those banks should not have been bailed out, and then the free market should have taken over to whatever price the banks would have traded to. Now, this is very ironic and interesting because we're seeing something happen again in England, and it is quite remarkable. So I want to just show you what's happening across the pond. This is a chart of basically the UK bond market. So what they call is the 10-year gilt. It's equivalent to the US 10-year treasury. It's issued by the British government, and it trades on their exchanges. And you can buy it and get the coupon payment. And what we've seen over the last year is that the price of gilt has dropped significantly. Okay, so their bond market has sold off. And in turn, as their bonds sell off, interest rates go up. And the British pound really started selling off 3-4 weeks ago. And the bond market came down with it. And just in the last week, we saw absolute chaos in the British bond market, to the point that the central bank, the Bank of England, came out and announced on Wednesday that they were going to go and buy UK gilt in order to stem the decline. And this is pretty significant because it's called quantitative easing. We've done it here in the United States, and it means basically the Federal Reserve goes and it buys bonds from the banking system, and in return, it gives basically money, reserves that go onto the bank's balance sheet. So quantitative easing in the United States happens because the Federal Reserve buys a corporate, a mortgage, or a government bond from a bank like JP Morgan, and they replace its value with reserves that JP Morgan can then use to go loan out and create more credit in the system. Now, why is this significant? Because this is the first time that a central bank around the world is doing QE. Because if you look in bond markets, whether it be the US or the United States or Germany or Japan, you're seeing interest rates go up in response to the highest inflation that we've seen in 40 years. And the problem we have is that central banks basically have a very limited number of tools. They can lower interest rates to zero, and when interest rates go to zero, then they can do quantitative easing, which they do by buying these bonds to make the interest rate lower, to make it easier for you to get mortgages or buy a car or take out a loan. But banks have been trying to do the opposite because they've been trying to fight inflation. So in the US, the central bank here, the Fed, is ready to do quantitative tightening. They want to sell the bonds on their balance sheet and take back reserves from the banking system in order to lower the money supply and then in turn, hopefully slow the economy down and lower the rate of inflation. But my belief is that these banks are really up against the wall. They're very limited. Their power is very limited. There's not much more they can do. to fight inflation, which it doesn't seem to be coming down, trying to fight inflation, they're going to cause a recession, which in turn is probably going to cause us to do quantitative easing again, and which means just more currency is going to be printed. And the alternative to fiat currency is very limited. Gold was always a hedge against debasement of the currency. But in modern days, cryptocurrency is now a hedge. You can own Bitcoin and get out of your dollars, get out of your British pounds, or get out of your euros right into Bitcoin. The other thing is that Ethereum is a cryptocurrency that actually has a use case. So there is utility at the end of it. When you buy Ethereum, you can actually use it to run the Ethereum virtual machine, which is basically you're paying for computational power. And it's the first time a real world currency that was very fungible with fiat currencies like dollars or pounds could be used for a digital resource. Okay. I mean, think about if you wanted to hedge your fiat currency risk, and let's say you had too many dollars, you had too much cash, so you wanted to buy gold. Well, at the end of the day, gold is a store of value, but there's not much utility you could do with it. And also, gold isn't very portable. You have to keep it in a bank, so you can't get yourself out of the banking system. Perhaps maybe you can buy some gold bars and bury them in your backyard, but you never know. Your dog might dig it up, or the teenage kids in the neighborhood might find it. So gold is very hard to store. But when you look at Ethereum, it has the same properties of a currency, but it also has a digital use case in the future. And I think that there's a non-zero probability, which means that this could potentially happen, that Ethereum becomes the world's reserve currency by the end of this decade. I mean, I'm not going out on a limb here when I say that Ethereum has basically all the properties of fiat currency at a time where central banks are basically losing their power. There's only so much things they can do. If they're going to print more currency, citizens are going to want to have an alternative that will maintain its value. And if you're looking at Bitcoin or Ethereum, Bitcoin has the digital store value, whereas Ethereum has the utility. And there's also other layer ones like Ethereum that you could buy. But this is a strong case for Ethereum being the global reserve currency. And I think that what we're seeing right now with the UK doing quantitative easing again at a time when inflation is still 8%, but it's coming down and their bond market is falling apart, it just tells me that central banks are going to continue printing money throughout the 2020s, even though they say that they want to do quantitative easing and have less money in the system, because this is the only thing they can do. And it's going to keep driving the value for sound currencies like Bitcoin, which have caps, and Ethereum, which, if you've seen some of my other videos, you're at a point now where you're burning more Ethereum than you're actually issuing. So there's going to be scarcity of Ethereum. And I do believe by the end of 2030, it's more likely than not that Ethereum is the world's global reserve currency. Love to hear what you think about that in the comments. Please like our videos and hope to hear from you soon. Thanks again for tuning in. I'm Ian King, and take care.